Absolutely, he needs money.
You think he's going
Once
broke?
again, come on. Fighters like that always go broke.
He's always spending, so I guess.
Absolutely.
Oscar De La Hoya just shocked the world by exposing Floyd Mayweather's deepest secret. He's broke. That's right. The king of flash and money has fallen on hard times. So, how did Mayweather go from living like a billionaire to struggling for cash? Let's break it down. De La Hoya and Mayweather, the rivalry that started it all. De La Hoya has been calling Mayweather broke since 2018. Every time he says it, the paper trail behind Mayweather gets longer. It started on October 18, 2018. De La Hoya was at the Intercontinental Hotel in Los Angeles, celebrating Canelo Alvarez signing what he called the biggest sports contract in the history of any sport, a $365 million deal with Golden Boy Promotions and Daz. And then a reporter asked him about Mayweather. That was all it took.
Look, another reason why he's crawled out of his rock, he needs money.
De La Hoya did not stop there.
Come on. Fighters like that always go broke.
He's always spending, so I guess.
Then he pointed at a name everyone knew.
Absolutely. Look, he's not fighting anymore, so that big money's not coming in. Look at what happened to Mike Tyson. He made what, $500 million?
De La Hoya's point was simple. Big earners go broke when the money stops coming in. He called Mayweather a broke-ass fraud and told him to stay under his rock.
Floyd, stay under your rock, dude.
Now, this was 2018. Mayweather had officially retired in 2017 after beating Conor McGregor. The exhibitions had not fully started yet. The lawsuits had not piled up yet. The liens were not public yet. De La Hoya was throwing punches in the dark, but the thing about punches thrown in the dark is sometimes they land. To understand why De La Hoya felt entitled to say any of this, you have to go back to 2007, because that fight is where everything between these two men begins. On May 5th, 2007, De La Hoya and Mayweather shared the ring at the MGM Grand Garden Arena in Las Vegas in a bout billed as The World Awaits. The fight drew approximately 2.4 million pay-per-view buys, generating roughly $136 million in PPV revenue alone. The live gate reached a then-record $19 million. Total revenue crossed $130 million. At that point, it was the most lucrative boxing match in history. De La Hoya walked away with approximately $52 million. Mayweather walked away with approximately $25 million. And a split decision win that preserved his undefeated record. The judges scored it 115, 112, 113, 112, and 116 to 111 in Mayweather's favor. De La Hoya lost on the cards, but as the promoter, he had already won at the bank. That is the foundation of De La Hoya's attitude toward Mayweather. He sees himself as the man who built the platform. In a March 2025 appearance on the PBD podcast, De La Hoya claimed he negotiated a 90-10 split in his favor, and that before their fight, Mayweather was earning only $2 to $3 million per fight on undercards. The 2007 event, according to De La Hoya, is what turned Mayweather into Money Mayweather. There is also a rematch story that De La Hoya has never let go of. The original contract had a rematch clause, 1 year. De La Hoya has claimed that Mayweather knew exactly what he was doing.
We had a rematch clause in our contract. This is something I negotiated as well. We had a rematch clause. If he beats me, I get a rematch. It was a 1 year clause. Guess what he did? He retired for 1 year and 1 day.
That retirement, De La Hoya says, was calculated.
Let's just say you guys do have another fight and a rematch within that year.
Yeah.
And he kept the commitment.
The rematch never happened. And from that point on, the rivalry between these two men shifted from the ring to public statements, social media, and press conferences. De La Hoya positioned himself as the man Mayweather owed a rematch to, and the man who could see through Mayweather's money image better than anyone. That 2018 rant set the template. What came after it made that template look prophetic, and what came after it started with Mayweather's post-retirement choices De La Hoya had plenty to say about. Life is expensive. De La Hoya turns up the heat. After 2018, De La Hoya kept watching, and Mayweather kept giving him material. By 2024, Mayweather was deep into the exhibition circuit. These are fights with no official record, no sanctioning body, no consequence to the 50-0. Mayweather had done them against Logan Paul, against various influencers, and in August 2024, he stepped into the ring in Mexico City against John Gotti III. What happened next gave De La Hoya exactly the opening he needed. The bout was unsanctioned and non-scored. It ended with crowd boos and no official result. De La Hoya posted a response on Instagram on August 31, 2024. He described what he said happened inside the ring, that in the second round, Mayweather had the referee replaced because he did not like being told to stop hitting behind the head. De La Hoya said, "Floyd is used to having the refs do whatever he wants, and he wasn't getting his way this time. It was so embarrassing." Then he shifted his tone. What started as criticism turned into something that sounded almost like concern, but carried a very specific message buried inside it. De La Hoya said, "Floyd, you're 50 years old. You're a legend in this sport, and I've stood up for you in countless interviews, including Shannon Sharp's podcast last week. But you have to stop embarrassing yourself with these exhibitions. I know life is hard and life is expensive, but come on, put your legacy first. Nobody wants to remember you like this. Life is hard and life is expensive." That line became the headline. It was the clearest public statement De La Hoya had made, connecting Mayweather's exhibition choices to financial pressure. He was not reading from a financial report. He was drawing a conclusion from what he saw. A 50-year-old legend doing unsanctioned exhibitions in Mexico against a Gotti with crowd boos and referee disputes. To De La Hoya, the math was obvious. These exhibitions do not carry record risk. They do carry pay. And De La Hoya's argument was simple. A man who does not need money does not keep doing this. Then came 2026, and the Pacquiao situation made everything louder. A rematch between Mayweather and Manny Pacquiao was originally scheduled for September 19th, 2026 at the Sphere in Las Vegas. The dispute was about format. Mayweather reportedly wanted an exhibition, no official record, no risk to 50-0. De La Hoya responded in a widely shared clip. He said, "Fight a real fight. You're still trying to protect your O." Then he went further. "Yes, you're 50-0 on paper, but people know you've lost." And then he pulled out the 2007 fight again. "Your own father said you lost against me." This is a reference De La Hoya has made more than once. He claims that after their 2007 fight, Mayweather's own father came to him and told him he had won.
Especially when Mayweather's father came straight at me and he goes, "Oscar, you beat my son."
Whether that conversation happened exactly that way is something only the men in the room know. But De La Hoya has told the story consistently, and he keeps using it as leverage every time the rivalry flares up. The 2026 Pacquiao drama also gave De La Hoya the chance to revisit the rematch clause story, the idea that Mayweather has always found a way to avoid the fights that carry real risk while taking the money that comes with the spectacle. The exhibition format dispute over the Pacquiao rematch in De La Hoya's framing was just the latest version of the same pattern he identified in 2011. Across 2018, 2024, and 2026, De La Hoya's message has never really changed. He believes Mayweather's post-retirement choices, the exhibitions, the format negotiations, the protected matchups, are driven by a need to keep money coming in without putting the undefeated record on the line. He has never produced a bank statement to prove it. But then, in December 2025, someone else did the digging, and what they found was a paper trail that ran through courthouses in Nevada, Texas, and New York. What the paper trail actually shows. In December 2025, Business Insider published an investigation titled "Inside Floyd Mayweather's Lavish, Debt-Filled Post-Boxing Life." The reporters reviewed hundreds of pages of public records, court filings, county property records, loan documents, tax notices, FAA records, and civil lawsuits filed across multiple jurisdictions. Every claim in the piece was tied to a verifiable public document. No anonymous sources, no leaked bank statements, just public records, and those records told a specific story. Mayweather's career produced an estimated $1.2 billion in boxing earnings. He retired in 2017 at 50. In 2021, he sat for an interview and made his position clear.
"I'm financially set. I want to let everybody know this," he said in 2021. "Every property I have is paid for. My jet, paid for. All my cars are paid for."
By 2024 and 2025, the public records showed a different picture. Loan documents filed with county recorders showed that Mayweather secured approximately $54 million in financing from specialty lender Don Hankey through entities affiliated with Hankey Investment Group at an interest rate of roughly 9%. Mayweather's lawyer told Business Insider the purpose was to fund other ventures.
Over the next year, Mayweather borrowed $54 million from him at roughly a 9% rate to fund other ventures.
The collateral package behind that loan is what stands out. It included 14 residential homes owned by Mayweather or his companies, his Las Vegas strip club known as Girl Collection, and his private Gulfstream jet. The loans were cross-collateralized, meaning they were secured by a broad pool of assets rather than individual properties.
The loan, according to his deal, a portion of the debt was cross-collateralized, which means it was taken across a collection of Mayweather's assets rather than small loans tied to individual properties.
The risk in that structure is direct. A default on any portion could trigger claims against multiple assets at once. The records did not stop at the loan. 2 commercial property foreclosures had occurred in the preceding 18 months. Public tax records for Clark County, Nevada showed that the building housing the Girl Collection Strip Club faced a risk of tax sale or further foreclosure action due to more than $52,000 in unpaid property taxes and associated penalties. Then there was the mansion. A $568.3 lien was placed on Mayweather's primary Las Vegas mansion in late 2025 for unpaid garbage collection services.
Last month, a $568 lien was put on his mansion for unpaid trash collection.
Aviation records added more. A Texas-based aviation fuel supplier filed a lawsuit against Mayweather's companies in June 2025, seeking payment for approximately $137,000 in unpaid fuel bills. FAA aircraft lien records from July 2025 documented an additional $358,000 lien on the Gulfstream jet itself for maintenance and related services.
A Texas aviation fuel supplier sued Mayweather companies in June over what they said was $137,000 in unpaid bills, which is jet fuel for his jet. FAA records showed that a lien was placed on the aircraft for another $358,000 for maintenance work.
Then there were the luxury goods disputes. A Las Vegas car dealership sued Mayweather over an alleged unpaid balance on a Mercedes-Maybach G-Wagon valued at roughly $1.2 million. Mayweather countersued the dealer, claiming the vehicle was defective. Separate lawsuits from jewelry retailers accused him of failing to pay for millions of dollars worth of high-end watches and gold items. One Miami jeweler's complaint referenced a Patek Philippe and Richard Mille models.
He also faced a string of lawsuits and liens that say he owes money for a Mercedes Maybach G-Wagon. Wait, they make Maybach G-Wagons? What the fuck? Jet fuel, which obviously is for his jet, and garbage collection at his Las Vegas mansion.
And in early February 2026, a Manhattan real estate lawsuit surfaced. Court documents described a claim by the management company of a luxury duplex apartment alleging Mayweather owed more than $330,000 in back rent plus additional damages, a total claim exceeding $515,000 when fees and interest were included. The complaint stated that payments had fallen behind starting in July 2025 on a 6-figure monthly lease. The Business Insider piece did not call Mayweather bankrupt. It described a situation of cash flow strain amid high living expenses, with reliance on debt financing and exhibitions to maintain liquidity. The outlet stood by its reporting when Mayweather later filed legal action against it, noting that all information came from open court and government records accessible to any member of the public. Mayweather's response to all of this would take a different form entirely, one involving a $340 million lawsuit and a defamation filing. Mayweather fights back. Mayweather's answer to Business Insider was not a press conference, it was not a social media post, it was a lawsuit and then another one. On February 3rd, 2026, a 25-page complaint was filed in Los Angeles County Superior Court against Showtime Networks, Inc. and former Showtime Sports president Steven Espinoza. The lawsuit sought at least $340 million in compensatory damages, plus punitive damages. The legal theories in the filing included aiding and abetting breach of fiduciary duty, civil conspiracy to commit fraud, conversion, and unjust enrichment. Al Heyman, Mayweather's longtime former advisor and manager, was not named as a defendant. The filing reportedly left him out of personal regard, but the entire case centered on allegations that Heyman had orchestrated a multi-year scheme to divert funds, with Showtime and Espinoza providing, as the complaint put it, knowing and substantial participation and aid. What exactly was the scheme, according to the filing? The complaint alleged that instead of routing fight revenues directly to Mayweather, Showtime wired substantial portions of the earnings to third-party accounts linked to Heyman and Associates, including one tied to Mayweather's tax attorney, Jeff Morris. These transfers were allegedly disguised through labels such as reimbursements, loan payoffs, or expenses, allowing funds to be redirected without Mayweather's full knowledge or authorization. The fights in question covered the 2013 multi-fight deal that included bouts against Robert Guerrero, Canelo Alvarez, Marcos Maidana twice, Manny Pacquiao, Andre Berto, and Conor McGregor. These are the fights that put Mayweather in record-breaking territory. The Pacquiao fight in 2015, the McGregor fight in 2017, the peak of his earning power. The suit highlighted what it called a complex web of hidden accounts, unauthorized transactions, and deliberate concealment of financial records. It claimed that requests for transparent fight-by-fight financial documentation from Showtime were met with claims that records were unavailable or had been archived. Court filings explicitly referenced Mayweather's verified career boxing earnings as exceeding $1.2 billion in total purses, with the Showtime period accounting for the majority of the highest-grossing events. The $340 million figure was described as the minimum unaccounted and diverted amount. The logic in the filing was clear. Mayweather is not broke because of bad decisions. He is short because other people took what was his. The second legal action ran parallel. Mayweather filed a $100 million defamation lawsuit against Business Insider and one of its reporters, stemming directly from the December 2025 investigative reporting. In the defamation complaint, Mayweather alleged that the outlet published knowingly false and defamatory claims about the status of certain property transactions that damaged his business reputation, creditworthiness, and ability to secure future deals. He sought at least $100 million in damages, along with a public retraction and restrictions on further reporting by the journalist involved. Business Insider stood by its reporting. The outlet noted, as it had before, that all information came from open court and government records. Meanwhile, people close to Mayweather had their own take. One of them was Wack 100, a man who describes himself as Mayweather's business partner.
Floyd is definitely not broke. Floyd is wealthy. You and I are broke compared to Floyd Mayweather.
Definitely. You know where Floyd is rich at right now?
What's that?
His peace of mind.
Wack 100 addressed the public records directly, the issue of things not being in Mayweather's name.
You're not going to find nothing in Floyd's name directly. You're not going to find, when you're dealing with that type of money and those type of situations, you know this, Vlad, it's set up. It could be a foundation, a trust.
The lawsuits, the supporters, and the denials all formed Mayweather's counter-narrative, but they sat alongside something else, the IRS, because Mayweather's tax history was already well documented long before Business Insider published a single word, and that history showed that the gap between earnings and payments had always been wide. The tax bills, the scandals, and the mirror. Mayweather's tax record is public, and it is long. In 2017, public records showed a federal tax lien for $22.2 million related to 2015 income, largely from the Manny Pacquiao fight earnings. Mayweather petitioned the U.S. tax court for a delay until after his Conor McGregor bout, citing illiquid assets. He paid it.
In 2017, he paid the IRS $22 million in back taxes, records show.
That was not the only IRS case. There was a $7.2 million unresolved claim from 2010. And in 2023, he settled another tax court case by conceding he owed $5.549 million in additional taxes for 2017, stemming from a disallowed $14 million legal expense deduction claimed through Mayweather Promotions, plus a $1.11 million accuracy-related penalty.
In 2023, he settled with the IRS to pay $5.5 million in back taxes and another $1.1 in penalties, according to a settlement filed in U.S. tax court.
Mayweather's own accountant from the early 2000s had seen the pattern forming long before it became public. Dave Hall, Mayweather's accountant in the early 2000s, said Mayweather spent heavily without setting aside enough to pay his taxes.
Dave Hall, Mayweather's accountant in early 2000, said Mayweather spent heavily without setting aside enough to pay his taxes.
The spending habits were not a secret. Mayweather built a brand around them. The cash, the cars, the jets, the watches. He called himself Money Mayweather and made visibility part of the image. He liked the tangible element of having cash in his hand, watching it come and go, said David Levi, who worked closely with Mayweather from 2010 until his last professional fight. The people around him noticed the shift after retirement. The court group around Mayweather began to break up once he left the ring. He parted ways with Al Heyman, his longtime boxing manager, and Leonard Ellerbe, the longtime CEO of Mayweather Promotions. His uncle and longtime trainer Roger Mayweather died in 2020. The infrastructure that managed his career-era money was gone.
He doesn't seem to have the guardrails that were in place. Mark Trados, a Las Vegas attorney who represented Mayweather during his professional fighting career in various business and legal matters, told the Business Insider. When you've got professionals that are doing the right thing for you, you're a little bit better protected. When you're out there on your own, your protection is dropped.
Now, here is where the story turns. Because while De La Hoya has been pointing the finger at Mayweather's finances for years, his own financial situation in 2026 tells a parallel story. In late January 2026, public real estate records revealed that Golden Boy Promotions had defaulted on a commercial mortgage-backed securities loan originally in the amount of $27 million, secured by its headquarters building at 626 Wilshire Boulevard in downtown Los Angeles. The notice of default stated that approximately $23 million remained outstanding on the debt. The building is a 12-story, roughly 150,000 square foot office property in downtown Los Angeles. Golden Boy Promotions has occupied the second floor as its long-term headquarters since the early 2000s. De La Hoya personally signed the loan documents as CEO. The loan originated in 2015, carrying a maturity date of July 2025. It was missed. Special servicing followed. Then came the formal default notice. Public appraisals tied to the loan process valued the building at approximately $19 million in 2025, a steep decline from its $40 million valuation at the time of the 2015 refinancing. The property was sitting roughly 40% vacant. And then there is De La Hoya's own personal history. In November 2007, the same year he fought Mayweather, photos surfaced showing him in women's lingerie. He initially denied they were real. He later admitted in interviews and a 2011 public statement that the photos were genuine, describing the episode as part of a period of heavy substance abuse. He acknowledged being an alcoholic and drug addict at the time, with frequent infidelity. The matter led to a lawsuit seeking $100 million, which De La Hoya settled out of court for approximately $15 to $20 million. This is the man calling Mayweather broke, a man who settled a personal scandal for up to $20 million, a man whose company just defaulted on a $27 million commercial loan, a man who generated approximately $700 million in career pay-per-view income and is now negotiating with special servicers to avoid losing his own office building. The record on both sides is the same record: big earnings, big spending, big debts, public documents that say one thing while the public image says another. De La Hoya has never produced a private financial document on Mayweather. His comments from 2018 through 2026 are opinion, rivalry talk, and public observation. But the public documents that exist, the liens, the lawsuits, the FAA records, the tax court filings, the foreclosure notices, say what they say. And Mayweather's own $340 million lawsuit says that if money went missing, other people helped it disappear. 2 fighters, 1 ring. Decades later, 2 parallel paper trails that neither of them can fully control. Thank you for watching. If you enjoyed watching this video, click on one of the boxes playing on your screen to watch more similar content.